Ladies and gentlemen, good day and welcome to the Q4 FY24 earnings conference call of NDR Auto Components Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishabh Barar from CDR India. Thank you, and over to you, sir.
Good day, everyone, and a warm welcome to all of you participating in the Q4 and FY24 earnings conference call of NDR Auto Components Limited. We have with us today on the call Mr. Pranav Rilan, Full-Time Director, Mr. Mohit Kumar Jain, Chief Financial Officer, and Mr. Rajat Bhandari, Executive Director and Company Secretary, along with other members of the senior management team. Before we begin, I would like to mention that some statements made in today's discussion may be forward-looking in nature and are subject to risks and uncertainties. A statement in this regard is available in the Q4 and FY24 earnings presentation shared with you earlier. We will start this call with opening remarks from the management, following which we will have an interactive question and answer session. I now request Mr. Pranav Rilan to share some perspectives with you with regard to the operations and outlook for the business. Over to you, sir.
A good day, everyone, and a warm welcome to our Q4 and FY24 conference call. Let me start by quickly going through our financial performance for the quarter and full year under review. Q4 FY24 total income stood at rupees 176.98 crores, a growth of 33%. EBITDA at rupees 17.37 crores, growth of 27.3%. EBITDA margins at 9.82%, and PAT for Q4 FY24 at rupees 11.61 crores. FY24 total income stood at rupees 605.15 crores, a growth of 51.6%. EBITDA at rupees 59.81 crores, growth of 57.2%. EBITDA margins at 9.88%, and PAT for FY24 at 38.71 crores. The last year has been an eventful and exciting year for NDR Auto Components. Aside from continued strong financial and operating performance, 2 business developments in line with our long-term strategic focus have helped us towards enhancing our competitive position and growth outlook. In February 2024, NDR Auto Components was empaneled as a T2 supplier to Hyundai Transys to supply seat trims to Kia, supply of which will commence from Jan 2025. The seating solution will be manufactured at the company's manufacturing facility in Bangalore, which is in close proximity to Kia's manufacturing operations. This is in line with our strategic endeavor to widen our OEM relationships. Kia is now our third OEM partner, adding to our esteemed and long-term automobile OEM relationships with Maruti and Toyota. Also, in February 2024, we entered into a technical assistance agreement with Hayashi Telugu for the supply of sunshades to Maruti and Toyota automobiles. Hayashi Telugu is over 100-year-old, 1.9 billion revenue company based out of Japan with capabilities in producing automotive interior, exterior, and aftermarket parts. This initiative offers NDR Auto the opportunity to widen its product portfolio and introduce other new and disruptive offerings. Utilizations at our facilities across Haryana, Bangalore, and Gujarat stood at 80%, offering us an ample runway to enhance sales with present capacities. The auto component sector is in a very exciting space. We will look into leverage our experience and understanding of the Indian market to continue to expand and introduce new options. Our strong balance sheet affords us the opportunity to explore both organic and inorganic growth opportunities. I look forward to continued progressive performance. We will now be happy to discuss any thoughts or questions you may have.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and 1 to ask questions. We have the first question from the line of Jatin Chawla from RTL Investments. Please go ahead.
Yeah, hi. Thanks for the opportunity. And congratulations on going forward on your long-term vision of transforming this from a single product, single client to a multi-product, multi-client company. So very heartening to see that. My first question is on the gross margin side. If I look at this quarter, your gross margins have come down significantly compared to what we have seen in the last few quarters. So from a run rate of about 76-77%, your RM to sales has gone up to like 78.6. Even on a full year basis, if I look at it, your gross margins are down by almost 200 basis points. So just wanted to understand what is the reason, what is driving that?
So the gross margins on the artificial leather business are slightly lower, and that is the reason for it to come down by 1%.
Oh, sorry. So this is basically, if the trim is an artificial leather trim, then the margins are slightly lower.
The margins are slightly lower, the returns are slightly higher. So that's where this comes from.
Okay. And this share of artificial leather would have increased significantly this year?
Yes. So the Grand Vitara has a high percentage of artificial leather, so that has increased.
Okay, got it. Second question is, when I look at your debtors, that number has jumped up significantly. I know we've seen a 50% increase in revenue, so that much increase one would have expected. But the increase in debtors is even higher. So your debtor days seem to have gone from like 30 days to more than 50 days. Any particular reason for that?
So the Gujarat and the NCR plant, our payment terms are within 30 days. The Bangalore plant is slightly higher. In addition to that, even our creditors have increased by similar days. So our working capital has almost no impact.
Got it. And you mentioned that your utilization rate currently is around 80%. The rate at which you are growing, you would kind of in a couple of years, so by FY26, you will maybe run out of capacity. So any plans of kind of, because, getting a land, setting up a plant, that takes time. So what are your thoughts on, expanding capacity?
So we've already bought land in Kharkhoda, where the new Maruti plant is announced, and we are looking for new land potentially in Anandpur. So once we run out of capacity, then we will look to expand.
So the Anandpur basically will be near Kia?
Yes.
Got it. And this Kharkhoda plant, when do we expect for production to start here?
No. So we bought land in Kharkhoda. We haven't bought any land in Anandpur. Anandpur, Kia, currently we're going to be selling from our Bangalore plant. If we get new business, then we will set up something closer. The Kharkhoda plant we will set up, we will use the existing capacities as of now. Once we have enough business, then we will set up something close by.
Got it. And once you decide to set up a plant, how long will it take for production to come on stream?
Probably 1.5 years.
Okay. Got it. Thanks. I'll come back to the queue.
Thank you. The next question is from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Namaskar, sir, and thank you for this opportunity. And so firstly, if you could give us an understanding of what would be the volume growth for the current year and our margin profile, and also where would we expecting our volume to come from, since we have a capacity at 80% as you were alluding to earlier. So if you could just give us some understanding how FY24-25 is likely to be.
So in terms of volume growth, what we've seen is an upward revision in terms of the volumes for this current fiscal for the SUVs. In addition, the Kia business is starting 2025 January, and the Shade business is starting 2025 Feb. The Maruti EV is being postponed to March 2025. So I think we should be at a low double-digit number this year. Margin should be at a similar profile, maybe a slight upward revision.
So, low single digits, I didn't get the point.
So I would assume anything between maybe 10 to 15%, maybe 15 to 20%, depending on the model mix and how the market behaves.
Okay. And how would the margin profile be likely?
Margin will be similar, maybe slightly better.
Right. And sir, we distributed dividend higher to the payout ratio of more than 10%. So have you formulated any dividend distribution policy, or on what basis are you deciding this number?
Sorry, can you repeat that?
So we declared dividends to the tune of on a payout ratio of higher than 10%, 12% payout on the EPS we posted for the current financial year. So have we formulated any dividend distribution policy that gives an understanding of how are you going to share your cash with your investors?
So between 10 and 15%.
This is our codified policy.
Yes, that's our policy, between 10 and 15%.
Okay. And so then coming to the cash flow line item wherein we have paid higher income tax to the tune of rupees 10 crore. So if you could explain the reason for the same, whether these 10 crore accounts for current year's profitability or earlier areas have also been paid.
Regular tax rate is somewhere 25%. Instead of tax is higher side, the tax is coming accordingly.
Okay. Okay, sir. But last year the numbers, last year operating numbers were lower. That is the reason. We paid last year 5 crore. Yeah. So you were answering?
25%, the standard corporate tax.
25% the standard corporate tax. Okay. And so going ahead, how are the employee cost and the raw material mix is likely to be? How are the raw material prices trending currently, as we have seen that there is a further inflation in the key raw materials? If you could give us some understanding of the raw material mix and how are we aligned to protect our margin?
It will be at a similar percentage. We don't see too much difference. In employee cost.
Hello?
We don't see too much difference in the employee cost or the RMC. We think it will be at a similar percentage.
Okay. And can you give the mix, sir? Out of the total? Yeah.
RMC is 77% and employee cost is maybe.
Yeah, that is percentage is clear. I want the mix, the basket for the RS.
Maybe I'll share that with you offline, or I'll get back to you on that.
Okay, and lastly, sir, on the depreciation part, this year, with I think with the commissioning of the new concessions, the new facilities, our depreciation rate, that the net absolute number has gone up. So for the current year, what would be our capex be? We will be spending, and what kind of capitalization can we look commercialization for FY2024-25?
So next year our capex is approximately 30 crores for the new projects, and depreciation should also be a similar number.
Right. So I'll wait for that answer for the mix, and I join the queue. Thank you.
Mix, give us some time. We'll
yes,
calculate
yes.
it.
Okay, thanks.
Thank you. The next question is from the line of Vishal from Swan Investments. Please go ahead. So the participant has left the queue. We will move on to the next question, which is from the line of Nitin Gandhi from InnoQuest Advisors Private Limited. Please go ahead.
Thanks for taking my question. So with the existing capacity, what is the max revenue potential?
So we're at 80%. You can add another 20-25% to existing revenue.
So we did 605, so max it could be 720, 750 band.
Yes.
Okay. And any operating leverage benefits flows because of this higher utilization of 1 or 2%?
Definitely.
Okay. And the plants which you are likely to add, how much revenue that should bring in additional?
So the current Bangalore plant for expanding, that should bring in another 120 or 150 crores. The Gujarat plant should also be something similar, maybe about 100 crores. And the rest is probably operating, just expanding volumes.
Okay, so in the Gujarat and Bangalore, you are just going to spend another 30 odd crores for each of them for as a capex, right?
Yes.
Okay. Thank you.
Thank you. Participants, you may please press star and 1 to ask questions. The next question is from the line of Jyoti Singh from Arihant Capital Markets Limited. Please go ahead.
Yeah, thank you for the opportunity. Sir, can you explain on the capex side that we have guided for 30 crores? So it will be included maintenance capex and what other?
No, this is pure capex. Maintenance should not be something major.
Not be major. Okay. And sir, on the PAT growth side, if I compare year on year, so this year we did it approx 37%. So we will be maintaining the similar range, or we are targeting higher growth from here onwards?
So next year's stable, there'll probably be low double digits. I think I just said that on the call. The year after, we should come back to the growth rate.
Okay. And so, we are already supplying to Maruti, Kia, and rest of the OEMs. So, any other OEM that we are looking or into advanced stock, and what update on the export side, if you can explain?
So, we're definitely looking at the Indian OEMs, but there's nothing that's happened right now, and no update on the export side at the moment.
Okay. And sir, another on the capacity side, we are currently at a 70%, right?
Capacity?
Yeah.
About 80%.
80%. And we have chances to increase more, or we are focusing to expand the Bangalore plant and will expand there, Bangalore and Gujarat?
So it looks like that next year the volume growth should cover some of the capacity utilization. It should improve the capacity utilization.
Okay. And sir, what are the target on the margin side? As you already mentioned, similar in this range. So we will be maintaining approx 10%, or we can expect more than this?
So I think for the moment, let's stick to the 10% target. And obviously, we're taking a lot of measures to improve that.
Okay. Okay, thank you, sir. I will come in a queue.
Thank you. A reminder to all the participants that you may please press star and 1 to ask questions at this time. Anyone who wishes to ask questions may please press star and 1 now. The next question is from the line of Jatin Chawla from RTL Investments. Please go ahead.
Yeah, thanks for allowing the follow-up. For the full year, could you share the number of four-wheeler sets that you would have sold this year?
About 6 lakhs, 6,25,000.
This number last year was around what, 6 lakhs?
No, so there was no Grand Vitara, there was no Balloon or the Bronx, there was no Jimny. The Alto also hadn't started. So that would have been closer to maybe 4.5 lakhs. Or maybe 4 lakhs.
Got it. And this year, I think there is some capacity scale-up that is likely on the Grand Vitara and the Fronx. That should help, right? Once that kind of increases.
Yeah. So there's capacity scale-up on all the SUVs, and they're expecting the Jimny also to do better.
Got it. And we are not present on the new Swift, right? I think we have the Dzire.
We have the Dzire.
Got it. So any existing model that we have which is likely for a big refresh or this thing upgrade this year?
No, nothing this year. I think the Dzire is next year and the EV is next year.
Sorry, Dzire is next year, and what is next to the EV, right? Got it. Understood. Yeah, thanks.
Thank you. The next question is from the line of Nitin Gandhi from InnoQuest Advisors Private Limited. Please go ahead.
So can you share something on our order book? What's
the order book is approximately 250 crores, 250 to 300 crores, I would say.
And executable over?
Sorry?
Approximate duration, average duration to execute this?
Within 2 years, maybe even 1.5 to 2 years, I would say.
Okay. Thanks.
Thank you. Participants who wishes to ask questions may please press star and 1. Ladies and gentlemen, that was the last question. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you for your time and participation. We continue to be optimistic about the opportunities before us and look forward to sharing these with you as we move forward. Should you need any input or clarification, please write to us or our investor relationship partner, CDR India. Thank you.
Thank you, members of the management. Ladies and gentlemen, on behalf of NDR Auto Components Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your line.